What's up, everybody? Thank you for tuning in to another episode of the CPA Zone, the podcast where we discuss tax strategies and accounting tips for entrepreneurs and real estate investors. My name is Ryan Pulice, and our company, the Pulice Group, offers tax planning and advisory services for entrepreneurs like you. Whether it's bookkeeping, tax planning, or CFO services that you're looking for, we've got you covered. What's up, everybody? Welcome back to another episode of the CPA Zone. Today, we're joined again with Michael Uadiale from Smead Accounting, and we are going to talk some more about the One Big Beautiful Bill that was signed into law July 4th. Our last episode, which actually just came out because it takes us several weeks to get everything put together, we had recorded after the House version passed, before things were finalized and signed into law. But now we have this bill that's law. I know from our end, we've had a lot of activity and excitement with our client base. But Michael, if you want to just give the listeners a bit more background about yourself again. I know you're a returning guest, but feel free to give yourself a bit more of an intro, and then we'll get into our topic for today.
Thank you, Ryan. It's always a pleasure to be here. I'm Michael Uadiale. I'm the managing partner of Smead CPA. We are a national tax advisory practice. We work primarily with very high net worth individuals, and we do a lot of work in the real estate space alongside with professionals who are licensed in healthcare industries generally. So that's what our firm represents, and very excited to be here again with you to talk through a couple of high-level things on the OBBB new tax bill.
Yeah. All right. Awesome. Well, I guess let's get into it. So, the one thing you and we talked about last time, and we're expecting would happen, we'd expected it to end up in the bill, was the 100% bonus depreciation. So that is back. It's now permanent, which in tax land, permanent just means until another Congress changes the law. For the time being, there's no phase down. It's 100%. It should be here for the next several years at least. So that was a relief for many of our clients, especially in the real estate investor side. Some people were sort of holding in a holding pattern, waiting to see what happens. So for now, if you buy a property and place it in service on January 20th, 2025 or later, you will be eligible for bonus depreciation on those assets that are bonus eligible, which is typically those assets with a useful life of 20 years or less. So not the building itself, but all the 5 and 15-year asset components that go into it. So have you seen similar reaction on your client base? A lot of excitement, or maybe more requests now for meetings and planning that now that there's some.
We have, but one of the things we like to always do as a firm that likes to be very proactive is we making some very specific outreaches in that direction to our clients, because the reality is, like Ryan, most clients just find the whole tax code is a maze, and they get a little bit excited, but they don't really truly know how that directly impacts each of them separately and specifically. So one of the things we're doing is we just going through all of our list, identifying where each of them fall into in respect of how the bill impacts them. And one will be having a webinar next week, Thursday, where we'll kind of discuss high level what the new provisions of OBBB means for many of them in that category, and encourage them to begin to schedule those meetings that you are referring to. We also will be doing a joint live event with a financial planner and advisor in Atlanta, Georgia, where he's going to be pulling in a lot of his clients and wanting them to just really be well informed as to some of the highlights of the new bill and how that could impact what they need to do for the rest of the year.
Yeah. All right. Awesome. So are you putting on that event? You and the financial advisor are kind of co-hosting?
Yes, so it's a joint event that the financial advisor on our practice will be putting up um, later August.
Okay. All right. Awesome. Now, is that a virtual event or is it in person?
No, it's going to be a sip and save event. I don't know what he wants to call it, but there'll be some finger, some wine and stuff, and
Oh,
then we will
great.
talk through some of the strategies that we believe uh, really will become very impactful for tax savings and planning by reason of some of these new provisions.
Yeah. Okay. Awesome. Yeah, I love the in-person stuff now. After that period of COVID, everything was virtual. Like I thought virtual was great for the longest time, and it is. It has its if you want to serve a much wider audience, virtual might be the way to go. But you can't beat those in-person events. Just got a different feel to it. So
Yeah, it has just this level of energy, which I think we are wired for relationship as human beings. That's just the reality of life. So I think there's a vibe to in-person event that is so different compared to all of the virtual. I mean, I love virtual. Like you said, it allows us the space to be able to reach out to the right clients, for the right clients to be able to work with us. But there's also something about having that face-to-face interactions.
yeah, yeah, absolutely. So I know we talked a bit about bonus appreciation. That's really exciting, especially on the real estate side.
Yes.
Have you looked at all about the provisions that relate to opportunity zones and how they're sort of enhancing them as well?
That's an interesting one. Again, I've read through all of that. The only thing I have not done at this point is to look at the blue book. And I don't even know if the blue book is out yet. And the reason why that's very important to me is because um, the tax codes and the laws are always written by politicians, but the blue books really helps us as professionals to be able to see examples
Yeah. Yep.
how both the CPAs and the tax attorneys that work for the politicians interpret and really mean for these provisions to be applied. So that's a very big part of the process for us as professionals. So I take that very seriously. The bill is what it is because if you realize many times, even up to the very last minute when the bill is signed, there are all kinds of changes still going on. So the blue book is like my guide, my roadmap in being able to achieve what we need to do for clients.
Yeah.
I do get it. Yes, the opportunity zone is a great one. It's back. It really gives opportunities for people who have those capital gains, trying to minimize their taxes and not maybe really having the need for all of the cash from whatever it is that has given them those capital gains to use. But there are always nuances that can be more clarified for you when you read through the blue book.
Yeah. Yeah, definitely. I mean, at least right now, it looks like the most of the enhancements that they're not going to come in, or I guess really the opportunities are an example, all the enhancements, they come into play January 1st, 2027,
Yep.
just under the old rules through 2026. So there's we're almost like caught in like this dead space for the next 18 months or so. Then then they start to pick up. But yeah, that's it's nice to see they're permanent because that was another similar to bonus depreciation. The opportunity zones really had bipartisan support. So you know, had popular it
Absolutely.
was popular on both sides of the aisle. So I was glad to see that made it back in there because they offer a lot of opportunities. And my
Yes.
understanding is that whole map will change based on updated census tracts, and who knows when that'll come out. I think they said it should be ready next July. So
Exactly. Well,
yeah,
we never know with those things.
there's just so many things like you'd mentioned. It's so many things that aren't really known for sure yet. But the law itself kind of gives us a bit of a guide, so we can kind of see where things
Yeah, and one other thing I'm really trying to get deeper understanding of will be even the bonus depreciation as it has been especially carved out for the QPP, the qualified production properties for manufacturing.
are.
Because if you really look at the bill, they've pretty much added a new section 168N for
Yeah.
manufacturing. I really like to understand what and how they define what is QPP for manufacturing. So
Yeah.
those are some of the nuances that really right now is still up in the air. And
Yep.
clarity will only come when you go through the blue book and you are able to figure out what exactly they mean by all that.
Yeah, exactly. Yeah, the way that reads, like you could basically write off the building.
Well, yeah. So
It's-
so that definition of what is the qualified production property.
yeah,
Because yeah,
yeah,
you're right, right? You could literally be writing off the entire building other than maybe the land, right? But
yeah, exactly. Yeah, they might tighten that up a little bit about the regulation, but it's going to be a pretty nice deduction opportunity there if you're investing in those types of assets where
it,
traditionally normal cost savings is going to give you 25-30% allocated to
it,
5 and 15 year property. Here you don't. Sounds like you're going to have a lot more than that available.
exactly.
Uh,
That's true.
yeah,
I
but
think
that's also a really nice add-on. So that's brand new. So last time we were talking a bit about some of the things your team does for clients, and you had this a 10-step process you take your clients through.
absolutely.
Can you share a little bit about that? Because that interested me. I was anxious to hear it. We didn't go through in a lot of detail last time, but I thought maybe now we could
Yeah.
touch on that a bit more.
I am glad to share that. So for us, everybody is different, but one of the things that we have come to refine, we continue to improve upon, but I will say we've really templatized it is how or what the journey should look like for most clients, whether they are just entrepreneurs starting out in business or the very, very high income entrepreneurs who are very successful, taking them through this 10-step process. It's almost like it's our playbook. And what it does is it allows all members of our team to know what to do, when to do it, and how to do it. Because the reality is, as many practices begin to move or shift from compliance to advisory, it's so important that they truly understand what advisory means to them. And
Yeah,
because if you who is offering the advisory service know clearly what you are offering, that's going to bring into your portfolio of clients the kind of clients that fit that. So for us, our 10-step process is very straightforward. And full disclosure, when we call it the 10-step process, it doesn't mean every client we go through all of the 10 steps. It's a function of what level of wealth building a client is. That's what's going to drive whether or not they go through all the 10 step or which of the 10 steps we put more emphasis on as against the other. So we start with what we call the dream exercise. Some people may want to call that the financial health assessment. It's not different from what uh, a medical professional will do when you first show up in their office, right? They want to really gauge and see, okay, what exactly is going on with this patient. For us, the thing we try to do with the dream exercise is to be able to use it to map out and understand both for ourselves and hopefully give the client that clarity that they need to know what their vision board looks like financially, what is their roadmap. So we use a couple of software. We kind of determine what their assets are as at today. We also use that same opportunity to understand and know what their liabilities are as at today, which you and I know if you back out the liabilities from the asset, that gives you what your net worth is today. And then we ask the client to truly paint the picture of what is their dream. If money was not a challenge, if time was not a challenge, what would they like to be doing? Who would they want to be doing those things with? And where would they like to be? Because again, what we're trying to do is help them paint in their mind's eye that picture of their financial freedom, because we try to very much distinguish between retiring and financial freedom.
yeah,
Financial freedom for us really doesn't mean you stop doing what you're doing to make money, but it's pretty much that opportunity and the option that you now have to be able to say, if I choose not to do anything, money is working for me. Typically, unfortunately, most people spend all their life trading their time for dollars. But when you come to that place of financial freedom, you have the choice to not trade your time anymore because you've put money to work for you and money begins to bring more money to you. So that's what we call financial freedom. So that first step, it's really very crucial for us because it helps us to just understand where is this client wanting to get to, and we also get the client to confirm for us, okay, what's their time frame to get there? I was talking with a physician yesterday. She and her husband, they are medical doctors. One of them is 63, one is 61. And we were just talking about the same thing. And I'm like, okay, what do you both want to achieve? What does financial freedom mean? And all that kind of stuff. So that's the step number one. We call it the dream exercise. Once that dream exercise is done, the next thing we want to do is what we call focus. Focus for us means, okay, if you are just starting out, you need to truly figure out what is your superpower and let your superpower drive how you make money. Now, for very successful entrepreneurs who come into our portfolio of clients, the focus may not be a big thing for them just because they already know what they've been doing that has made them successful. But for new upstart, it's so important that we be able to get them to clarify what their focus needs to be. And one of the things we do is we try to give them some personality tests because there is something about how each of us are wired that
Oh, like you
makes
mean like a
some.
disc or something similar
So
assessment?
we use the Kobe, for example,
Okay.
which is KOLBE. We use the Kobe test, and then we kind of use that to understand how their personality matches what they want to do or what they are doing. Okay.
Gotcha.
So that's the focus is very important. I mean, I know there's always this over there's just this hype about diversity. People feel like, oh, you need to diversify how you make money so that if one part of the economy is going down, the other one. Yes, that's all great, but we believe people should diversify more vertically, not spread themselves horizontally, right?
Yeah.
So that focus is a big part. And once we have been able to get the client to clarify what their focus is, we then drive it even further by what is the third step. That third step for us is the criteria, or what I like to call our 3-minute decision. So let's talk about that primarily using, say, something like real estate. I know, Ryan, you will figure out that many clients who want to do real estate, one of the things that gets them stumped is, okay, which area of real estate should I be in, right?
Yeah.
And so you will find many people will be subscribing to all kinds of newsletter where they get all kinds of properties every week. They're seeing thousands of properties, right? And they have no idea exactly which property they should buy or not buy. One of the things we get them to do is that criteria. The criteria, we begin to break it down. Okay, what do you want to do? Do you want to focus on commercial or do you want to focus on residential? Let's say the client says, okay, I want to do residential. We want them to go even deeper. What kind of residential do you want to do? Do you want to do single family? Do you want to do multi-family? Or do you want to do duplexes? So you begin to peel off the things that are not necessary. Even within the properties, you begin to say, okay, what kind of properties do I want to acquire? Do I want it to be class A properties, class B, class C, or D? So all of those things that seems to be like very subjective in the minds of some people, we get our clients to really clarify that focus. And the power in this, and that's why I call it the 3-minute decision, is the fact that it makes it very easy within 3 minutes to make up your mind. If you see three, four, five properties put before you, right? It's easy on the basis of you having established maybe no more than 3 to 5, less is more, criteria of what kind of properties you want to acquire. In the same way, so if you take a very busy physician, for example, he or she is busy practicing medicine, but at the same time, they want to begin to build their portfolio of real estate. Now, such a person comes back home after the day of medical practice. He or she has no time to start looking through hundreds of properties, right?
Yeah, exactly.
Okay. But if you are clear on your 3 to 5 criteria of what is a good fit of a property, including the market, you could choose that you want a cash market, you could choose that you want an hybrid market, or you could choose that you want an equity market. Then it's easy for a property finder that is working with you to be able to know these are the kind of properties that my client is looking for. So when they bring to you a list of properties, it's a matter of taking your cheat sheets and looking at those properties and say, okay, each of these properties, do they fit my core criteria? So that's the third step. So the first thing is the dream exercise. The second is just your focus. The third is your criteria. And the fourth is what we call building your team. We are a very firm proponent of making our clients understand that wealth building is a team sport. Okay. There's a reason why something like basketball or soccer or football is very different from tennis and some other individual sports. If you are into wealth building, you got to understand that you need a team. I was speaking again with one of our clients yesterday. He's a very successful surgeon, and he was just being appreciative of the fact that I've brought a team of good attorneys and a couple of other people to be part of those that makes it happen for him. Because I was actually recommending to him that he read Dan Sullivan's book, Who Not How,
Yeah.
and I summarized the book for him, but I said I still wanted him to read it because it's so important to be able to have your team. So, whatever your means of how you want to get to your financial freedom, once you know who you need on your side, you need a CPA. Typically, in most cases, a good CPA or a good tax advisory practice should be the quarterback of that team. Okay. You need to have a good bank or a good financier. You need to have a good attorney with you. You need to have a good estate planner. You need to have a good insurance person. It just depends on what exactly is your roadmap to get into your financial freedom. That drives who should be part of that team. And that team should all be working together. I can't tell you how frustrating it could be. And Ryan, you know that where you talk to a client, you give some very great recommendations, and you say, okay, we need you to go do this 1, 2 things, maybe with an attorney. And then the attorney never comes back to you, the CPA, to check in and say, okay,
Yeah.
what exactly do you want this guy to do? They just go off and do their own thing. And then if this client doesn't show up to you again for another 8 months on the tax season, come tax season, you may be in for a surprise. So our office, we typically like to be that quarterback. So having that team is extremely important. And we ask the client's permission to make sure that each member of the team also have access to our client portal so that they can put stuff there and then we can see all of those things. So when we look at our 10 step, those 4 steps that I just went through, those are what we call the wealth building side of our
Yeah.
10-step process. Okay. And then the last 6 are what we call the tax strategy. The first of them is the entities, because we believe very strongly that how your businesses are organized, right, is also a function of helping to drive your taxes down. So we look at their structures. Many times they may come with no structure. Sometimes they come with some structure, but we also want to collaborate with the attorneys, and then we redesign the structure to fit where they tell us they're trying to go. Entity structure is not just saying, hey, we want you to be a C corp, we want you to be an S corp, or you want it to be a
Yeah.
partnership. It may just mean, okay, for the next 2, 3 years, for example, this is how your business is going to run. A good example is take a look at this new tax bill. Now we have a very enhanced qualified small business stock. Okay. Now, that really could mean taking a look at some of your clients as they are right now and really begin to redesign the way they are set up to be able to leverage this new tax base. So the entity structure is a big part, which is one of the things we do on the tax side. Then the tax planning itself. The tax planning is more short term, meaning it's on a year-to-year basis, but there's always an overall long-term planning. Our goal for us is, look, if a client has clearly done their dream exercise and we know that this client is saying 5 to 7 years from today, I want to be in a place where I'm making about $500,000, whether or not I'm doing my 9 to 5 job. One of our responsibilities is to now see how we can help them legally and ethically shrink their tax burden. Because when your tax burden is shrunk significantly, what it does for a very savvy investor is it allows him or her to have more cash flow to continue to invest. Okay. So that's why the tax plan is a big piece. And then the next thing is we begin to leverage, okay, now let's begin to look at their estate planning. Okay, the estate planning now, if you take a look at this new tax bill, it looks like, oh, it's not a big deal because the annual exemption amount has moved up to 15 million. But there's just a whole lot of things you can really do when you look at the income tax planning and the estate tax planning side of things. And then the ninth thing is what we call elimination, because as clients begin to grow, as their portfolio value begins to go up, the impact of taxes on them is significant. So we begin to really introduce them into all of the other alternative things they can do to really eliminate taxes, right? And then the last thing is what I call walking the talk. You could make a good plan. You could do all the great plans for an investor or a client, but ensuring that they are documenting those things very well, documenting them in the right way, it's so important to keep them in an audit proof position. I call it not gambling with taxes. So
Yeah.
those high level is our 10-step process of what we do with most of our clients.
Oh, okay, that's awesome. Yeah, that last point is really important too. The documentation is key because that is probably the most frequently missed piece. Like, yeah, you can qualify as a real estate professional, but you have to be able to prove it. And how are you going to do that if you're not tracking your time? Can you use other methods like your calendar and stuff? Sure, but it's going to be more difficult. There's just so many things. Reimbursing yourself from your corporation if you have a C corp or S corp.
Yep,
Technically, you need to have an accountable plan in place. Having
exactly.
that stuff in place and on file for your clients is it's huge. So yeah, a lot of that gets missed, and a lot of that's the stuff you're not going to hear about on like watching YouTube videos on tax planning. Um, but you kind of get in there and start working with them, and those things
You know,
constantly evolve. The other thing you mentioned, like having that attorney on board that you're going to actually be able to communicate with, because there's nothing more frustrating saying you need to have these particular clauses in your operating agreement, and then you get it back and it's just some boilerplate thing that doesn't have any of the stuff they need for what they're trying to do.
yeah, so that's a very challenging piece. And I really want to see a higher level of collaboration between CPAs and attorneys.
Yeah.
You just talked about operating agreements, right? Now, very commonly, you will notice that when people form an entity, say the entity is a limited liability company, the moment you really elect a tax entity type for that legal entity as an S corp, 9 out of 10 times, if you go back and look at the operating agreements of that entity, it does not provide, neither does it allow for that change from just an LSC to an S corp. So those are things that most times people need to pay attention to.
Yep. Yeah, exactly. Because that could ruin your S status. And the next thing you know,
It's,
now you're a C corp.
yeah.
I didn't want that. But yeah, it's so important, and it's these little details that can just get people hung up, and they find they have all this additional tax liability for something that should not have happened, that could have been avoided if managed right. And it's just these little things you wouldn't think of. If you're not a tax professional or an attorney, your odds are you're probably not even aware these little things exist and could trip you up. But if you're examined, an IRS agent is going to make sure you did everything right, all your I's dotted, all your T's crossed, or yeah, there's gonna be
Yeah.
penalties to deal with quite often.
And I want to just use this opportunity for listeners, especially those who are not tax professionals. People should be, and I'm not against people watching YouTube or Instagram or TikTok and
Yeah,
all of these influencers, but I think it's really very scary to me to see the amount of professional advice that is being put out there on social media by people who are not professionals, to be honest.
yeah,
Because most times, all of these influencers are there just giving some sound bites, and it's so exciting. I was talking to another physician client on Saturday, and she was saying to me, um, she learned that if she buries her pet that just passed in her primary residence in California, that translates that principal residence to become tax exempt from property taxes. Okay. Yeah.
there's a
But
cemetery, pet cemetery now.
yeah, because it's so you see these are the kind
Wow,
of
that's
things.
wild.
Yeah, these are the kind of things people pick up from social media and they
Yeah,
run with them without really checking in to see whether or not this is true. I
yeah,
had to tell the lady to slow it down. That is definitely not true, especially in California, that is really more rigorous with things like that. So, uh, I want to say people should be careful about what they're picking up from social media, especially when the person giving those sound bites is not a professional in that space.
yeah. No, I totally agree. I think we're about coming up on time. I really
I know.
appreciate you coming back on. Anything else you want to kind of put out there before we wrap up? I think this has been a
Um,
great
I,
conversation.
I think I'm pretty excited for the new tax law. I think the thing I want to really put out there will be for people who I consider to be in the middle market space when it comes to estate planning. Meaning, when you look at it right now, it does look like for a couple, husband and wife, right? They have up to 30 million of annual exemption amount by reason of
Yeah,
the new tax law. However, um, many people in that space, the inclination may be to not worry about doing anything in the area of estate planning. But I want to truly say there is still quite a whole lot of opportunities for people to look at really combining their income tax with their estate planning. Because if you take the new pass-through entity tax law, you combine that with the SALT, you will notice that the SALT of 40,000 is being phased out if
yeah,
you're making up to 600,000 or more. So that's where really combining your income tax planning with your estate tax planning in this current or new dispensation is something I would encourage both clients and my fellow professional CPAs to pay attention to, just because there is a whole lot more that you could do now with the way the laws have been designed. That would be the only additional stuff I want to throw out there.
yeah. That's good advice. I totally agree with you there.
Yeah.
And I appreciate you coming on. We'll put all your contact info in the show notes in case people want to reach out. But good time. We'll have to do it again. And have a great day. It was nice
You
talking to
too,
you.
Ryan. My pleasure. Have a wonderful day too.
All right. All
Okay.
right, everyone. That about does it for today. Thanks
Bye
again
bye.
for listening.
Cool.
And until next time, have a great day. Are you interested in becoming a client? Click the Discovery Meeting link in the show notes to schedule a free call to discuss our services. So that about does it for this episode of the CPA Zone. Thanks for listening, and I hope you found something valuable that you can take away. We are taking on new clients, and if you'd like to work with us, then go to our website and fill out the client intake form on our contact page. This can be found at thepulicegroup.com/contact. That's ThePulicegroup.com/contact.